Hello, everybody, and welcome to the Plus3 Futures and Commodities show. We are recording here on Friday, January 17th, about an hour after the close. And the theme this week is sort of mean reversion. Markets that were up were down, markets that were down or were up. And we're going to review the charts and the major markets and sort of see what does that mean going forward. My name's Ben Maldonado. As always, I'm here with my partner, Barrie Hederachi. Barrie, how we doing?
Doing good, doing good.
Barry's in California, in Los Angeles, but he's okay. A lot of you, reached out to me and were asking, and yeah, he's fine. And thank
hmm
goodness, his family was spared from the fire zone, even though they were nearby. And you could say the S&P kind of dodged a bit of a fire, it looks like this week. So,
hmm
anything
Ran
you
to
want to
safety.
share? Anything you want to share about your experience, Barry?
Well, it's I think being in the markets helps because it's always something unexpected.
Right.
And
And you're comfortable with uncertainty?
yeah, uncertainty, unexpected. It was okay. It's just everybody else. I mean, my goodness, right? So much damage. It's
Yeah.
unbelievable, the winds, and we were in the middle of the wind, so it was something to experience. Anyway, it looks like it's all kind of getting taken care of now. So
Excellent. Excellent.
move on.
Well, let's jump into the S&P here. We came down to that 5750 near area and bounced pretty hard. So what next?
Yeah, yeah. What next? Well, the trend is down. We've been making lower lows and lower highs, and
Hmm.
that's what we talked left off with last week, talking about how this area, we have support and how 5750 structural support. And I set the where there's two places I use depending on what's happening up here and what looks to be having traction.
Hmm.
So I'm going off the low that we actually called out, and the sort of the false break, I'm leaving it alone for now.
Hmm.
And last week we talked about this 270 degrees up from that low in September, meaning that 5750 really needs to be taken out for some anything serious to happen.
Right.
Actually, all the way down to 5673. If you look at the structural support here,
Sure.
it's been tested and something like that to be taken out. I don't think it's going to be crawled through. It's going to just be sort of gap through. Or
Blasted
some,
through.
yeah, exactly, exactly. Some of these you just can't go down, tiptoeing.
Right.
Anyway, so the support was found and we had a nice bounce. And we talked about this range last week, how between 58.50 and 60.20, there's a lot of free range. I don't have any levels there, and we've been in that range, but since November, right? So
Yeah.
it's a familiar range. The key now is to see, which way are we going to break out of that range. Now, early on, we were starting to establish a range, and we had a false break to the upside. Now I'm talking about just looking at these two levels, right? 60,
Sure.
20.
Sure. Sure.
And we've had these before prices even got there. And if you guys go back and look at the old tapes and the old charts, I'm just using that as an example. So we kind of had a false break to the upside, got back into the range and kind of had a false break to the downside. I'm just seeing sort of the balance, between the
Hmm.
two breaks. They seem to even out. And and the movement was roughly, half a square. So everything seems on the surface to be like a normal correction. Everything seems sort of stable.
Like a consolidation before the next move up.
Yeah, yeah, because I'm hearing a few people talking about buying the dip and how they didn't want to miss it. And I'm like, okay, well, that would work at times.
Hmm.
Anyway, so 270 was the key level, 5750. Now it held. What happens next? Well, we have 6020. That's a key level above. And we tried earlier to do something there. We couldn't get it done. Tried to get above and stay above early part of December. Couldn't really get that done. So now that I think obviously for next week, that's a focus, at least for the S&P
Yeah,
cash here.
the high today was 6014.96, so just under 6015.
Mm-hmm.
So
Yep.
right there.
And so far, we have lower highs. Let's see what happens overnight markets and going into Tuesday.
Right.
If we take Friday's lows out, obviously we have something setting up to the downside, looking at the pattern. And if we take out the highs, well, then we have this entire section above 60/20 being overhead, and see how we handle that.
Hmm.
So it's sort of a good spot in ways if you can play by the charts, because we're making lower lows, lower highs. So far, that game has been working just fine. Highs are in place, and we've been talking about how the highs came in, all the cycles, and did we burn enough time to balance that out? It's hard to say, but I think we have a little bit more to go.
Hmm.
We we did about 45, right? We did about 45 days of corrections. I think we have a little bit more to go.
Hmm.
So if you put that on the high, so actually what we end up having is
High to
45, high
high.
to high 45,
Hmm. Hmm.
which is actually that's kind of negative. Come to think of it,
Right.
right?
Right.
um,
Because that is a valid cycle, high to high.
yeah, yeah, heck yeah. If you go back and look, you'll see it
Hmm.
repeating often enough to trade.
Hmm.
So that's what's happening with the cash. If you look at um, the calendar day chart, futures calendar day chart, pretty much the same story. I'm not going to get into repeating everything. We've covered all of these
Hmm.
last couple of episodes. Interesting thing, good recovery in the Dow. There's the Dow futures chart. So, so this range, I know I left it on there even after we kind of broke above it and quickly came back under. So 43,723 is sort of the beginning of resistance for the Dow, topping off at 44,300. I'm still sticking with that. I
Hmm.
think this is where things would have to get resolved. Either we get on top of this and start consolidating above this 43,700 level. That would signal one thing. And if we can somehow consolidate above 44,300, that would tell us another story. And if we fail here, then we have the other path.
I mean, look how good that level is. Look where we closed.
Yeah, right on.
I mean, right on it.
Yeah, yeah. So the zone is actually good. The level is okay. Level is good. The zone is actually even better.
Hmm.
So we'll see what happens here. We're all pushing up against when you're talking about sort of mean reverting this week. This is one of them because we've been in this area quite a bit. And we've been on both sides of it. Now we were above it in November, December, then we were below it, and
Hmm.
now we're back in the middle. And let's see. So here's a continuous trading date chart for the E-mini.
Hmm.
We didn't quite get to the 5750 level here. And this 5892 levels kind of got a little bit hacked, got under it, got above it. But I think really the two levels to watch here is the 5750 and the 6100. Sure, it's even enough, and we have key levels there, and they're all lining up. Um, so that's that. Talking about, um, well, we had this expanding triangle drawn out, and then we did come up and tag the low here before bouncing higher.
Hmm.
Let's see what we do here. I mean, this is the part that's a little hard to call. When you're looking at big highs, you get bored, you start forgetting about what we're doing here. But let's not forget, we were out. It's a 90-day cycle, very very strong one, and we're only about halfway. We're only down what, um, this is 22 and a half, 30 days down. So we're not quite
Hmm.
there, as far as the downside goes. And we had weeklies and a lot of other cycles expiring at the highs. So that's why we're being cautious and not just jumping on as if nothing happened in the past. And so everything that happened in the past affects the future as far as patterns go. And that's why we're tracking this, see how it all lines up.
Hmm.
And so far, we are making lower lows. So there's no reason to change our view from, December 1st. It's pretty much the same story,
Hmm.
until it's proven wrong. Yeah, that's how we trade, right?
Agreed. Agreed.
If it ain't broke, don't fix it. That's kind of
Hmm.
the. So let's jump to the weekly chart. So here's really the big story, I think. We scored out at the high, the week of the high, and last week we talked about this 225 level being that's really the level to weekly to take out. Without this being
Hmm.
taken out, not a whole lot's going to happen, and that's roughly 5,800. And you can see we tapped that this week and bounced. Far as the pattern here goes, it's a little it's I mean if we made a new high this week, it would have been we had an outside and another outside on top of that, right? So
Yeah, back to back.
back to back and didn't and before that we had an inside. So let's see what happens. I This looks a little negative to me, just the price action this week, even though we ripped higher. I mean, we ripped and we rested at the right place. Now, as far as high goes, we had the weeklies and all these other cycles that came, and you guys can go back and look at the relevant day or the week you want to check, and the videos are there. So basis the weekly, the key level is 5,800. That if you want to take out or not, and obviously the upside we have 6166, which just happens to be the 50% of the square. And a lot can happen range bound between these two levels. So we have to be patient in calling out anything on the weekly side. So far,
Hmm.
it's okay. It's textbook correction based on the square we're using, which is square 45. Everything looks good. Let us not forget that we did complete this big old 4-year ABCD, and those just don't finish up with 4 bars.
Yeah,
That's the thing.
yeah, yeah.
That's the thing
Yep.
that to remember. And if this was going to go through my just the experiences, it would have blown through already. It wouldn't have corrected for a month and then blow through. Generally, that's what happens. So, so let's watch.
I
Let's
mean, look at what happened at the 90. We corrected for almost a year,
yes, exactly. So, I
90 in
mean,
time.
now that
Yeah.
brings into mind, we were talking about the the daily chart, right? We had a 90
Hmm.
that expired, so it
Hmm.
just doesn't finish up in a couple of 2, 3 weeks, especially if big cycles expired above. So let's see how it works out. And you guys know the range here, so we're good.
Yep.
Normally I jump into the 30-minute and do a couple of charts there, but I think the fire got them. The fire, something happened, and some of those files got corrupted, and there's a daily backup that happens, and I need to go back and dig them up.
No
Um,
worries.
yeah, the problem is even the backups as I'm going back, a lot of them have at least those charts in that folder got corrupted. So anyway,
Hmm.
I'll pull them out from somewhere. I get about years worth of backups, so
Hmm.
we'll uh we'll get on it by next week.
Speaking of mean reversion,
Yeah, yep. Trying.
the bonds.
Exactly, it's trying. So we talked about this 50% of the square being support, and that we could expect a little bounce coming off of it, and there's the bounce. And we also, I think, we talked about how this area is going to provide a lot of resistance
Hmm.
because we have a little bit of overhead built up here. And well, 3 days up. Let's see what the counter trends. This is the longest one we've had since we started the down leg. So
Hmm.
um, yeah, bonds are not done. So sure, we might consolidate a little bit for now. But I think next time we take out this low, that might push us into the whatever the grand finale is here for the
Hmm.
time being. So let's watch that. But for now, it's yeah, sure, we found a little bit of traction at the 50%, but the trend is definitely down, and that's the thing that we trade, the trend.
Hmm.
And here's the weekly bonds. We're still stuck under this 114 area, so that's the reason, right? Long as we're stuck below that, we have all this overhead above it.
Yeah, it's
Not
hitting its
not
head
much.
on the ceiling.
Yeah, exactly. And eventually we're going to go fulfill this ABCD down and probably go. I mean, if we get there, I keep talking about this every week. We're probably going to take this out also before
Sure.
we all is said and done. So let's see. So our bond view is pretty much the same. Not much has changed. Let's see. Let's take a look at crude. Did really well. Now we talked about if it got past 73.50, 79.50 is the next stop. And sure enough, we ran up there on Thursday. Today we took a little breather. And what
Talk
we
about
really,
hitting your
yeah,
head on the ceiling, right?
absolutely,
Hmm.
perfectly.
Hmm.
And so that was the trade. We broke out 73, very clean shot up. I mean, very quick. And this is where options come into play, right? It
Hmm.
happens very, very quickly. Now, unless we can get above 79 and a half and hold it there, we're probably going to just consolidate above 73 and a half. And that is very bullish. So,
Hmm.
I would call that, that's when the market's kind of primed. Yeah, sure, getting above the 50% would be great. But just between us, now that we're coming off of this pattern, if we can hold above 73.50, I think it's primed in the sense that it could break to the upside on short notice, you know? So
Yeah.
unless we break below 73 and a half, and then, a whole nother scenario can take place, back to yawning and complaining, right? But for now, I would really watch this to see if we can get above it, but a little bit of a correction is called for.
Hmm.
So basically, oil, the crude is bullish. We got to our target. We're waiting for a little bit of a correction to finish up and continue the move, and also watching to see if we end up below 73.50 or not. So that's a big one. We want to watch
Big,
that.
big test there.
Hmm. The other big news with the crude is,
Look at that.
we broke I wish this curve, circle was just a couple of bars just to
Right.
make it, frame worthy. Like I said last week, I was going to adjust it a little bit, but, all the fires and the winds just wasn't quite in the mood to be
Right.
playing with the markets.
Right.
But anyway, look, the upside breakout is real, and let's see what we do. We could have a come back and retest the breakout area. That could happen, but basically, looks like we left the station. Is what it looks like.
Hmm.
And here's our regular crude chart for a 60. Went up pretty much a quarter of the square. Square 60. So we're doing okay. You know, eighth of a square comes out to about 74 and a quarter, 74. So long as we can hold above 74, it's even stronger than that
Sure.
73.50 that we have on
On the daily.
the daily. So this is
Hmm.
it's starting to get some traction. So 74, 73.50, that's a key level to watch. The only thing is we hit against that resistance above, so now we also have to take a little break and see how it finishes up. But those little bites and pieces make up, man, over the year.
For
You don't
sure.
have to catch the entire thing. Gold, well, look what happened to our little triangle.
Yeah, poked it poking out of the triangle.
Sure enough, and if you guys want to see clues, I mean, here's our little day where we held right on top of the 50% of the square,
Hmm.
and then we reversed, meaning we took the high at that low bar, and that was it. We had two strong days up, broke right through. Well, now it's really this 26.96 level. Can we hold above that?
Hmm.
And if we can, 26. Hold on, if I have that right. No, actually, it's a third. I want to say 20.
Around 27.
Yeah, 27.10.
Hmm.
So if we can hold above 27.10, I think the breakout is real and everything's real. We can
Right.
we can pretty much go with it. So let's see if that can. I mean, reason being, if it does that, then we're also holding above the breakout level, right? The breakout triangle.
Hmm.
So everything kind of fits together if we can do that. In the meantime, what happened? We did correct in a full square, which is very healthy, and then we did this sort of fourth wave kind of a uh, correction consolidation, just trying to see which way it's going to break. But knowing gold is probably just going to consolidate a little bit longer. But I'll tell you
Hmm.
though, long as we're above this 50% of the square, which ends up
Super
being,
bullish.
yeah, this 26.70, it is bullish. Uh, and above 27.10 will be our sign that, hey, the triangle did break to the upside. So we can probably start looking to trading it alongside. Only thing is we want some confirmation here, mainly because the weekly is, on a weekly basis, this is a pullback, a counter trend high.
Yeah.
If you're tracking it, if you're tracking those. So if you look at the weekly, so we had a big cycle expire at the high, and sure enough, we had a little correction, and now we're back. Sure, we have lower highs coming in, but we're back in that zone, right? So
Hmm.
I would prefer it to finish up in a nice level where we can actually get some traction, like 50% of the square. But here we didn't quite do that. So let's wait. I want to see if this is something where people are going to jump in and sell it, or if it's going to correct a little bit more. But this is, you talk about mean reversion, right? You were talking about
Yeah.
opening. So this is really the idea. We're back to the 144. Didn't quite get to the 50%, kind of in the middle. It's about a third. Um, so now we have to wait to see what happens because we did pull up into that.
And this phenomenon was in a lot of different markets, and I don't know what it's waiting for, but it seems like we're building to something where the next moves are coming.
Hmm. Yeah, yeah. And here's the 2/3 of the square. So we basically held there and
Hmm.
rallied back up. So let's see. We want to watch the upper end, and we want to see if that breakout is for real. So if you traded the breakout on its own, well, great, But I'd like to see it hold about 27.10 to begin with,
Hmm.
and then
Hmm.
we can see how it takes on the 240 level, the square up here. All right, let's move on to copper.
Copper had a good week.
Yeah, the breakout was pretty good. We talked
Hmm.
about the breakout last week, and it was going to go up and test the 50% of the square, and it still might. I think if we can hold above this, what is it, 430,
Hmm.
um, copper's in good shape. 430. I think if we reverse right around 430, give or take a couple of ticks, we should end up. We should end up at the 50% at least to go up and test it because we didn't quite, break the old high, over here to call this a false break. We didn't quite do that. So I don't think it's over where we did do a false break at the low, right? So we had the false break,
And
ran
if you
up.
look at it, you got a nice W there, right?
Yeah, that's true. Yeah, very
You know?
nice. W. Yep.
Hmm.
So let's see how the correction, how this, it was really today, and I can't blame a market for correcting. It's fine. We'll
Hmm.
just see how it.
Sure.
What we want to know is, is it pausing at the right places? Now, the reason for all the, happiness in the copper is, we did get above and hold above 144 this week. Last week we talked about it, how we were hanging around below 144, square 144 earlier, and last week we couldn't quite clear it, but we got to, manage to close above it, right? So this week we were able to, well, not just manage up there, but we also had some air above it. So
Hmm.
we're doing pretty good. 422 is the square 144. So weekly's got his own little triangle happening here.
Yes, it
Let's see,
does.
yeah, let's see what happens. But for now, it looks good above this 422 level.
Hmm.
And all the metals are kind of backing and filling and adjusting, it feels like,
They are.
right? And speaking of metals, I mean, here's silver ran up into the 50% of the square. And I think we talked about it last week. So, silver, ran up into the 270 and it did correct a solid
Full
90,
square.
yeah, full
Hmm.
square in roughly 45, 48 days.
Hmm.
Can't complain about that, but I'd like to see it, well, last week I think we talked about the counter trend. Counter trend came out fairly well, 2 days down, but only 2 days up. We couldn't quite get up and tap the 50% square. Again, it looks like it wants to go, but it's not quite there. Um, I'm talking about
It may just burn out time until the 90's done, you know?
yeah, that could be, but this low looks good. So well, knowing
Hmm.
silver, let's see how it puts in the puts in the time.
Hmm.
So what else can I say about silver? Well, all the metals I think are at key levels now. So and you guys know the trend, you know the levels. So, we're above 90, we're good. Lows, I said lows are in place. We just had to manage this uh, for now. And once we get above the 50% level, I think then we're looking for prices above 35. But
Hmm.
up until we do that, we got to trade this carefully, because after all, it's silver. A
Yes.
little bit like natural gas in some days.
Right.
It's a mini widowmaker. All right. So dollar, very strong, very strong. And I think that strength is going to continue.
Hmm.
And if anything, we've been perma bulls, it'd probably be in dollar, right? We've been just bullish
Yeah,
as far as I can remember.
pretty much.
And yep. And so I think it's the same case. Not much to say, just that about 108 dollars is very strong. And we touched 110, 112 is really the next target.
Hmm.
Yeah, not much to add. Let's you know, just have fun trading it.
Sure.
So I jumped to the weekly
Right.
before I did the daily. So pretty much the same story. We corrected the 60, had a nice bounce. So we're trending. I would say this is a pretty healthy looking trend.
Hmm.
And well, let it go, let it trade. We have plenty of space and room, and it looks bullish for now. So
Yep.
no squares, nothing scary going on. 90 is a little further away. So I think for now it's okay. We're holding the direction. Euro, well, we did go up and tap that one third of the square and couldn't quite get above the 90. We're below the 90, so we're weak. I mean, I always sound the same. I notice I catch my tone every time I'm talking about the euro. It's like, ugh. It's weak, but it's good if you're trading, right? It's
Sure.
market wise, it's just in a slump. But those are great markets to trade. So, and I don't think it's quite done yet. So enjoy the trade. I think there's more to go. I can see some, if we keep the same angle, I see some potential squares coming in. We got early February, we have a timing count coming in and
Hmm.
also price. So let's keep an eye on these things. But now trend is, well, you know, trend is straight down. So we can take a quick look at the weekly. So looking at the weekly, it just looks like there's so much more to go. I
It
can't
does.
imagine.
Yeah.
And I think it's going to happen so long as it's below this 104. It's 04182,
Hmm.
0.418. It's very weak. I used to talk about how he's weak below 108, but you see how we got all that worked out perfectly, right? We've been talking about it
Yeah.
forever and had the false break and false break on the false break.
Hmm.
And that's how a big moves begin, completely get everybody on the wrong foot. Remember the news up here? I don't know if
Yeah.
you recall this. Oh my God, dollar's done, blah, 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 right? All kinds of
Right. Right.
um, crazy talk. And anyway, here we are. So you guys know the levels there. Obviously, we have more to go. Let's see what else we have left. You can talk about
Yep. Talk about
natural gas.
natural
Yeah.
gas. Yeah.
Well, great, great. Because we're at the upper band. We're really pushing. We're 90 down from the highs in August of 22. So this is really I mean, you called it out. We called it out. You pointed out all the monthly. Remember, it was a monthly chart, right? We're looking at all the
Yeah.
amazing
All
places
the
to buy, how this is just
right.
the value area.
Yep.
Yeah, 153. So if you guys were watching us, we've been bullish natural gas since the lows came in.
Hmm.
So, and we got through the quarter square. So I'm guessing you have something similar to talk about. But anyway,
Absolutely. Yep.
yeah. So we might take a little break here because we're at the 90, but after that,
Yep.
looks good to go. What else? Hang Seng. Well, the thing is, it's looking good compared to the low
But not so
that
much
came.
compared to the high.
Yeah, not so much compared to the high because the thing is, it's doing the same thing. We're making lower lows and lower highs,
Hmm.
and much lower highs. And our little safety zone is here. It's between 19, let's say 19,200 and 19,450. Um, well, you guys can see what happened. We dip below potential false break, I would call that, because we could
Hmm.
have stopped here. We didn't, did the drop. And now, it's the same story. As long as we're above the zone, um, the market could, upside is open. So let's see if we can at least go up and test 2380 or so, uh, and at least make a higher high, right? And
Hmm.
then we can talk about a higher low. The other important thing is we did come down 72 trading days, so that completes that criteria. I think the correction was pretty timely,
Hmm.
and so I think this was a false break, and now we can look for it to move higher. That's all I got
All
for
right.
the wrap. And if you guys like our work, please remember to like the video and subscribe, and also maybe check the alerts.
That's good coverage for a mean
Hmm.
reversion week.
Yes. Well, there was a lot to cover, a lot to move, but it's almost like we're back in the same place now.
Hmm.
Because that's the problem with mean reversion. We're back in the same place. And I think next couple of weeks are going to be really important and
I mean,
pivotal.
that's the
Um,
trick, right? Because we're back in the same place, but what does it mean, right? And
mhm.
that's the question that is still unanswered.
Well, I mean, in terms of the S&P, we know the highs came in. We don't think the lows came in, so we have to deal with it in that way. So next week,
Correct.
we're continuing to look for these counter trends and how they're forming and where they're forming. And these are pretty easy. If you just draw a line all through the highs, we got them, right?
Hmm.
I mean, just speaking of the S&P, for example. So we're still there. I mean, 60-20 is key level. Like I said in the opening, if we can get it settle above that, okay, let's start formulating to see what kind of a patterns emerging out of that. But for now,
Hmm.
everything looks good coming off the high. And all the markets we've been talking about are moving, I would say, properly, right? As expected, more or less.
Yeah. Yep.
And so we want to continue to watch that. But the thing is, the way they're moving, they're building up to something. That's what it feels like. And the
Hmm.
patterns look like. And that buildup has to terminate at some point, one way or the other. So the
Yes.
more time we burn, the closer we get. So next week, it's a short week. And the following couple of weeks, I think a lot of action. So don't miss the episodes. Make sure you guys catch these. So another reason to get the alerts. And let me put it back to you,
Okay.
Ben, and we'll take it from there. Well, Ben, what do we got here? Continuing lower lows, lower
Uh,
highs.
Yeah.
Hmm.
And a lot like the S&P, we're pushing on this counter trend, and now we're just trying to say, okay, where's this counter trend going to stop? Because if it stops giving us another lower high, this is fat pitch territory again.
Hmm. Yep.
The key levels here, we still haven't cleared, if you notice, even though we're above it
Hmm.
and we've been above it for 3 days in a row, we haven't cleared 21,366. We keep having part of the bar above and below.
Right,
And of
right.
course, today the high is right on the 1 by 1 from the high.
Hmm.
So if we can't clear 2136, then we can't clear it above. Then we see if we clear it below, then we're going to go test these lows. And if we roll over here, we should take out these lows.
Right.
If we can clear it, like if we get a full bar above
Hmm.
on Tuesday, when we resume, or in Globex, Monday, then we could push up to 22,000, and we have to say, okay, maybe this was just a correction. We came down, found support at this half square, and now we're going to push for another high. But that has to happen, right? We have to clear this, and we have to beat this, break this trend line on the downside and see if we can't, push
Yeah.
higher.
Hmm.
Let's look at the other time frames, and you can see what we're seeing on a weekly and monthly basis. Weekly, it's kind of the same thing. We have another down week, right? Made a lower low again this week, and we haven't fully cleared this 21,082 because part of these bars have been over it. So next week we got to see, can we get uh, a bar where the low is above 21,082?
Yep.
And if
Hmm.
so, then we can push and go higher. If not, Here on the weekly, you see what we're looking at. If we break this one by one and we get stuck below this, get a full bar below this, you're looking at 18,000
Hmm.
would be next support.
Yep.
And you can see why this 21,000 is so important. There's your, structural support
Hmm.
on that high in July.
Yeah.
So it's pretty critical.
Hmm.
Let's take a look at the monthly. Monthly so far, we've got a down bar, right? We've got a lower low than December.
Yep.
And the key level here again though is this 21,100, which we've been crisscrossing.
Hmm.
So long and short of it is 21,000 area is really, really important. Let's take a look at that calendar day because that was a nice one with the 45, showing how it was working there.
Hmm.
This was the thing, right? We had a counter trend, and then the first move back up, trying to see if we could go, totally got stuck under the full square, which is a 360. And
Right.
this is going back to that October low that you called out in real time,
Hmm.
which is why one of the reasons why we had cycles and everything saying this is pretty significant.
Hmm.
Now we're just trying to see how we're gonna sort of move from here. Is this correction over? Are we pushing up? Well, we need to get above 22,000 on this particular daily chart, the
Hmm.
calendar
Hmm.
calendar day. If we do, then we can say, okay, we're going. If not, it looks like rollover city. But we'll see. Anything else to add here on NQs?
No, we're good. Good.
Let's take a look at Bitcoin. Bitcoin had a good week. Um, Sort of looks like we had this correction finish here, right, where we found support with a nice little false break to boot. Even
Yep.
even Bitcoin likes false breaks. All
Hmm.
markets like false breaks.
Hmm.
Got the false break, and look at that, straight up for 4 days. Now
Yeah. Well.
we're still, if you're looking at your reference points of high and low, right now we're still showing a lower high if we reverse from here.
Correct.
Key level 102,400. So
Hmm.
102,400. You stay above that, clear that, then it's challenging the all-time highs. It's 108,000.
Hmm.
It's not bearish, and as we were talking last week, this thing could pull back to this area here and still
Hmm.
be fully bullish. But you don't want to buy up here and have to hold a 30% drawdown. So
Yeah.
that's not what we want to do. So let's see. Let's see how it plays out. For now, the key levels are 102, 102,400 and
Hmm.
108,000.
Hmm.
Those are the ones we want to watch. Here's your weekly. You talk about some wild stuff here. Two outside bars, man.
Yeah. Something
Look at
so.
that. But look at
Yeah.
where it found support.
59, 540.
I mean, this really captures the vibration here, which is why when I saw this, I said, that's a pretty significant high.
Hmm.
How it plays out, if we just get, maybe we could correct, go straight across in this half square, burning time until we get to the 144 in time.
Hmm.
Is that possible? Yeah. But right now, it's vibrating really well. The 108 caught the high, the 89 here caught the low,
Hmm.
and it is wild. 2 weeks in a row outside bars.
Right. Yeah. Yeah.
So it's this volatility before the next big move, and we'll
Hmm.
see what it is. Monthly just shows again this 93 level, pretty critical. Look at the interesting thing too with the reason I like to show this in the circle, because this is one of the examples of how it works on the circle, right? You come out
Hmm.
of the circle and it comes back into the area of the circle. It comes back into the area of the circle, as it goes around, that circle still has influence.
Yeah.
Uh,
Came bounced right off of that.
yeah. But the 93 here on a monthly is important. On the weekly, this 89.5 was important. And the daily, here's your numbers, the 102 and the 108.
Hmm.
Those are the key numbers in Bitcoin. Any observations you have on Bitcoin you want to add?
Well, I don't. Nothing really comes to mind. I just feel like that high still looks good to me, and the high
Hmm.
that came in,
Hmm.
and this could be just a sort of a more complex kind of a correction counter trend. See how it works out.
And we'll see. We got the levels. We'll see what
Hmm.
the levels will tell us what it
Yep,
is.
exactly.
All right, let's go to the commodities. As I said in the opening, it was sort of a mean reversion, and that was true in the commodities as well.
Hmm.
The metals, crude, the some of the softs, even the grains that I highlighted last week. They didn't make a lot of progress this week, and they pulled back. Went up a little bit, went down a little bit. So we're going to review a couple of the ones that still look actionable.
Hmm.
The the bottom line is I really think we got to closely watch this commodity space because like I was saying when you were going over your markets, Barry, it feels like it's setting up for the next big move, like something's coming.
Hmm.
I don't know what, but it's starting to appear in the charts that these consolidations are starting to move even more, either getting more extreme or coming back in or pushing out. You know what I mean? And it's it's
Hmm.
it's creating a fibrillation kind of before the heart attack. So here's corn. Corn we talked about last week. Here was Friday's big bar. So that's where we ended. And look what we did this week. Man, we essentially
Yeah.
stayed at the highs all week, and then we pushed up again on Friday and closed on the high. That's one of the things I've learned watching commodities for all these years is that
Hmm.
when they close on a high or low on a Friday, it's a pretty significant message.
Right.
And the grains were down. All of them were down this morning. And then by the end of the day, they were all, they all pushed up well off the lows.
Hmm.
But corn continues to push. It's looking good. The levels here, it looks like it wants to stretch up for this 499 area, 500 area,
Hmm.
where we have the full square. You can see we took out these highs from May of last year. Basically, this week we took them out.
Hmm.
So we want to watch 500. That's going to be really important. And we want to see how, on any pullbacks, we want to see where it holds. Do we hold this quarter square here? Do we hold the half square here? What do pullbacks look like? Hopefully they hold on top of these highs and most importantly, this 447, because then that'll give us a good support to launch for the next move.
Yeah.
But the next big thing, I think this coming week or not too long, we're going to see this, 499 attacked, and we want to see how it handles that because you can see what happened over here.
Right.
It on the way down, it got stuck.
Mm.
So getting up on top of that would be big. Essentially
Yeah.
everything since July of 23 would be below us. So that's a big spot coming up for corn, but it looks good.
Yeah.
There's your weekly. Took
Looking
out these
strong.
highs.
Looking
Yep.
strong. Yeah. Yeah.
Took out these highs this week. So that's good. 517 is the number there. That's the half square. So we'll be watching, 499, 500 on the daily, and then 517 on the weekly. But
Hmm.
same principle. You can see we broke the downtrend, tested it, and now we're just climbing the one by one. So it looks nice. Monthly basis, we got above this 462.75. Haven't cleared it because part of the month we were below it, but the further we get above it, then it gives us like the February bar would have room to be able to pull back and then sit on top of that.
Hmm.
And you can see why that's important because this whole consolidation pre-launch was under that.
Hmm.
So corn is progressing, looking good. Anything to add here on corn?
No, I think it's great. And we talked about this level each time we cleared. I remember 395. We talked about that,
Hmm.
things are going to start trending. Then we talked about it picking up some momentum above 416. We talked about 447. So layer by layer, we've been following this, and the market's doing just fine.
And
So
that's how it works, right? We go
yeah.
level to level, step by step in
Hmm.
building.
Yeah.
And every level you capture, you have more confidence that, the trend changed and you're moving. And now you can
Exactly.
see the angle, how the angle changed.
Hmm.
That's a sign of momentum coming in. All right, let's go to the next one, which should be beans.
Hmm.
Soybeans is a little behind. As you can see, it's a little behind corn. Corn's been leading, but this week we pushed above this full square, went back below it, and then look where we closed, Barry, right on the full square.
Right on the line. Yeah.
But again, this is a good sign. Look at where the low on the pullback is here. Here's the high, the previous high. So
Hmm.
that's perfect structure there. It's just getting ready, like corn was a couple weeks ago, to sort of clear this area here. The highs from here.
Hmm. Yep. Yep.
Once we clear those, then we push up towards 1125. But it's an important spot.
Hmm.
But moving. The reason I'm not covering wheat is kind of going sideways like this. We haven't gotten this kind of move yet. They're still kind of stuck in a half square. But beans and corn, as you can see, are moving. Let's look at the weekly. So weekly 1060 obviously is a huge area. You can see why. We did take out this lower high here. Now it's attacking this high over here. But clearing 1060 on a weekly basis is really, really important because then it gives us this sort of base to stand on. And then 1283 comes into play.
Hmm.
And we attack the downtrend line from the Ukraine invasion highs. Pretty big stuff.
Right. Looks
All right,
good.
let's look at the monthly. Monthly is doing well because we're sitting on this 983 full square for the month. We were, battling around in here for 5 or 6 months. This would be the first bar that cleared it above for us,
Hmm.
and allow us to break the downtrend line and then push for 1275 next. You can see this little structure here. It's kind of similar to all this stuff that was going on over here.
Hmm.
So once we can push out of that, that'll kick in the momentum for the 1275. Anything to add on beans?
No, we're good. On track with the grains.
Yeah, you can see the pattern is similar to corn. It's just like a few months behind it,
Yeah.
you know.
Yeah. Yeah. Exactly.
And then once I could see something in wheat, we'll put wheat up as well and have people focus on wheat in addition. All right, let's go to the next one, which is our old friend, natural gas. And as you called out, one of the most important things here in natural gas on the daily, from this
Hmm.
February low here to the high here, we did 90
Hmm.
up in price.
Hmm.
And that's important.
Yeah.
It doesn't mean that the party's over. It means, we're probably the reason we're seeing this sort of jagged move where we go down, we go up, we're coming down again.
Mhm.
We're starting a correction of some kind. It's
Yeah.
not negative. It doesn't mean like I said, it doesn't mean the party's over. Just something ended here. Now we need to have a little correction. What kind of correction can we expect? I think a half square correction would be huge. We only came down here to like 340, 341 area, because as you can see, that would mean we're sitting on top of all this.
Hmm.
We could just bang around in this four area as well, above and below this full square here. If we do that, that'd be super bullish. I mean, we could even pull all the way back here to around three and still be bullish.
Yeah.
This area in here, like 310, 3 to 312 in that area, still
Yeah.
be
For sure.
bullish.
Hmm.
But I think we got to expect a correction, especially if we get stuck below 401, 402. Then we're gonna say, okay, next level is 342. We want to make sure we stay above 342. But we did do a 90 in price from this low to this high.
Wow.
So it's probably a local high. All right, let's check the weekly. The
Mhm.
weekly looks beautiful, right? We had this big,
Yeah.
huge multi-year triangle, broke out, battled around this 371 for weeks, almost a whole month. And this past week, we got a full bar above, which is
Yeah.
great. That's clearing the level. So 371 weekly basis, we want to stay above 371. As long as we do, it'll build and build the pressure and build the base to get us up to 470, which is the next level, the half square. And you can see why that would be really important. Obviously, you got this peak here, but look back in time, right? That was a high in 2018. It was a high in 2014.
Hmm.
It was a
Kind
site
of
of a
held.
battle
Yeah.
here in 2014 earlier. So that would be next, provided that we hold 371 weekly basis. I've talked about this before. This thing loves 90s, low to high, high to low. So if we take the low in February, March of last year, 90 weeks puts us out into November of this year
Mm.
for potential high, right after hurricane season. All right, let's see. Let's look at the monthly. Monthly also shows this big triangle and then the breakout. See, we've had like just a steady 1, 2, 3, 4 months of higher highs.
Hmm.
On a monthly basis, 488 is the next big level, and you can see why. Here it was support, here it was resistance,
Hmm.
here it was support, here it was resistance. So that's going to be a huge test, if we push up in there because of weather or whatever the reason being.
Hmm.
All in all, it looks good. The only fly in the ointment is daily basis. We did do a 90. So as long as we're below that high, we have to expect some kind of correction. Let's see how the correction plays out. And hopefully we can hold these levels so that, uh, we have a positive outcome and we get to continue to trade to the upside.
Hmm.
Anything you want to add here on that gas?
No, I think it's doing perfect. It's a nice trend. We caught it early enough, and let's continue to watch. I mean, thing is just getting warmed up. So,
Yeah. Yeah. Yep. It looks good.
mhm.
So that's all for me on the commodity side. With the time we have left, Barry, I wanted to. This is a topic you and I have had discussions about
Mhm.
before, and I think we have a decent amount of time. But how do you deal with the mind? Because as human beings, our mind wants certainty. Like we
Mhm.
want to know why something happened and what's going to happen and when it's going to happen. And the nature of trading is we never have certainty, right? We only have probabilities. So
Mhm.
how do you deal with and how do you recommend traders deal with this sort of aspect of our mind and human nature that wants that certainty that we don't get in trading?
Well, I would say to have the least amount of decisions that you have to make in order to put a trade on, and what that usually
Well,
points to is to have it. Go ahead.
I was going to say, what does that mean when you say least amount of decisions?
Well, if you,
Like the
for
least
example,
amount of criteria that has to be fulfilled for you to put a trade on, or a simple system? What do you mean when you say that?
meaning I think I'm leaning more towards someone that just looks at the market without a sort of a systematic approach,
Hmm.
and they go on how they feel, they think, and they might, and this could happen, that could happen.
Or what they
Uh,
read, or what this
what they
guy
read,
said?
yeah, yeah,
Right,
or collecting information online, or whatever the way the thing is. I mean, those are hundreds and hundreds of decisions because you have to go through, sort through all of that data that you're picking up. Even in a 30-minute video, you know how much data there is for the mind to sort out. It's just way too much. So
right,
my thing's always been is really to come down to some kind of a systematic approach so that, well, it's defining what you want. That helps. Once you've
right,
defined sort of the time frames and what kind of type of trades that you want to take, and the way you're going to approach that, is it going to be in writing options? Is it going to be buying options? Is it going to be straight out trading, whatever the method is it investing, short term, 0 day, you know.
Right, right.
So once you come to what fits you, your psychology and your capabilities, then I think you have to systematize it so that you know it's a zero and a one. You know, you want to get to the binary where you're in or you're not. So basically, you need a trigger. I think you need to have a trigger to get into trades, and whatever the foundation of that trigger has to be tested so that you know what the probabilities are. So we talked about probability earlier, right? You
Hmm.
mentioned that. So
Hmm.
once you know the probability of your system, then the rest is sort of it really doesn't matter. Everything fades, and you can listen to the news. It doesn't matter because you don't really take a trade based on what you think. You take it based on your system that you have validated, and you have some numbers to back it up. You have some numbers to give you reason to trust it. And then you know it's whatever percent winners that you get and whatever percent that you break even, all of that, all of those numbers. I mean, the longer you trade, obviously, the better feel you have for that. But I think once you get about, 50, 60, 70 trades, you should have a good idea. So if you go back and test your theories, you need at least 50, 60 trades. And so once you have that, I mean, the reason I get into that approach to this is this is what I do because there's no way to think about it. There's no way to think about this, that, the other thing. First of all, we're only getting probably, I don't know what percent, but it's definitely less than 5% of what's really happening all over the planet. So, or what affects a particular market that you're trading, all the details. There's no way. Obviously, that's why we chose the technical path and we just look at one thing, which is the sum total of all the news, which would be the chart. So I
Hmm.
think once we have that under the belt, its next step is to really come up with a methodology and a sort of a framework to trade that for a profit. And
So
that's the basic, yeah. Hmm.
I was going to say, I have a sort of a vision in my mind when you're saying that
Hmm.
traders need to put a funnel sort of onto the information that filters out and just gets them down to the things that they need in order to make a decision. Like you can't have too much. You can't drink from the fire hose. You have to like put it into a drinking fountain or something that you can actually handle in terms of
Hmm.
the
Hmm.
amount of information. For example, using the squares, it's the levels, right? If it
Hmm.
stays above this level, I buy it. If it gets stuck below it, I sell it. I
Hmm.
mean, that's simple, right?
Right.
The
I
input
mean,
is the
mhm.
input there is the level and what does the price do in relation to that level?
Right. So there's a fine. I'm just realizing as you were saying that, I'm realizing a couple of other things, and that is the fire hose idea is definitely true, no matter what the case is.
Mhm.
So yeah, that fits in there. The other part is as far as the having a sort of a tripwire trigger to enter trades, and they know that as soon as you enter a trade, that starts the entire circuit, right? Then you have to manage the trade, exit the trade, so forth and so on. So all of that has to be already in place. But we're basically talking about not knowing, being uncertain about the future.
Hmm.
How do you play the probabilities without having the mind get emotionally involved in it?
Right.
And that's the reason for bringing up sort of a mechanical entry, because then you don't have to be um, your emotional state wouldn't affect the entries or the stops or how you manage the trade. So, this is what I mean by you want to be able to, make the least amount of decisions when it comes to trading. So the fewer decisions you have to make, the fewer weak points you might have where you make in a weak state, you make the incorrect decision, or there's some kind of fear, or there's kind of news, and you take the wrong you click the wrong button or the one that would give you the least amount of profit. So, so I think it's twofold. One thing is the uncertainty. Okay, we have that's ongoing, obviously, right? Till we die, things are going to be
Hmm.
always going to be have some degree of uncertainty. And so, bringing that to trading, at least we have really accurate historical data. we have dates. So there's a way to measure probability. So once we get onto that track, then all you have to do is find a system that meets your criteria and the probabilities that you can deal with, that you can afford. And once you get to that, then then you can look at the news. Sure, you can filter the news and funnel the news, or take all the news, long as the principle, foundational principle is, look, those things, no matter what I'm reading, yes, there's a layer of that that's practical. You have to consider if something huge is happening, obviously you have to consider that. But day to
Hmm.
day basis, 90% of the time, 95% of the time, all of that news ends up becoming some sort of a noise.
Yep.
And your system is the only one that can stand the sort of test of time, because that's the one you've tested over time. So my reply to that is, I mean, I can't think of anything. I haven't seen anything, another approach, but I'm sure there are. And if you guys have any ideas, comment below, and it'd be fun to take that up and maybe take it in episodes. We can talk about what you guys write, and maybe sort of dissect that, because we don't know. I haven't. I feel like I've looked at everything, but you never know. There are always
No.
other approaches.
Yeah. Yeah.
So, but basically, that's the short and sweet of it, is to have a mechanical approach so that you can always lean on the probabilities, but also have a little bit of access window into the what's happening real time. So you're also being practical about it and not becoming some kind of a static um, person where you're not flexible. So you
Right.
can have a system, but you still have to be flexible if the house is on fire, so to speak.
Yeah. Yeah. I mean, listen, it goes back to the thing with Mark Douglas, which is you should rate yourself and grade yourself on, did you follow your system?
Mm,
Not was the trade profitable? Because I think for me the the certainty comes in when I have to be profitable, right? When my mind starts saying, "Oh, you have to be profitable on this trade, so you got to
mm,
be certain before you enter it." And
yes.
that's a real like sort of death trap for trading, because we there
Mm,
is no certainty.
no, no.
And so if your mind is sort of seeking that certainty, kind of step back and figure that out, because it's gonna screw you up every time, right? Because you never have certainty before you enter a trade. It just doesn't exist.
So I think what can take its place is having that trust in the system,
Yes.
right? So then you lean on that, because out of every 20 or 30 trades, you have X number going to be winners, X break even, X will hit the stop.
Hmm.
Then you have to manage the trade. So I think taking that approach, you kind of skip like 1,000 things you have to solve individually, and you just jump right onto the mechanical path, and then you have fewer things to think about and fewer decisions to make, because you're just following what you have laid out. Now, building that system and laying that out might take some time, because it depends on the person. That's why I think
Yep.
when we talk about trading and whatever setups, we speak in sort of general terms, so that no matter what the system is, what the approach is, everybody can make use of the information. We're not. That's why we don't say, well, you should sell it right here, um, because we don't know what somebody else's risk level is, or the
Right.
relationship to risk is. So I think anyway. That's my approach. I think it'd be great to hear what everybody else thinks about it and how they approach it, and write your comments below, because you know, it's fun to talk about markets, but really where the rubber meets the road is really when you put that trade on. And
How
like you
you
said,
deal with it, right?
yeah,
Yep.
yeah, and
Because your mind will create all kinds of scenarios that can trip you up if you're not careful and you're not aware of what's going on.
yeah, and that's one part. The mind is the only part that we pay the least amount of attention, right? I mean, how much time do we spend looking at charts?
Everybody wants the indicator, right? Give me that magic indicator, when the
Hmm.
real work is on your mind, right? And your
Yes.
psychology.
Yeah. And part of that is, I mean, the start of it is just being aware, like, oh, look, I'm doing that again. Look,
Right.
I'm thinking like that. So
Right.
if you can catch yourself thinking, then you can just step back and watch it, let it play itself out, and just return to mean reversion. You have to mean reversion to your baseline, which is I'm going to
Right.
follow, I'm going to follow.
Follow my system.
Yeah,
I'm going to
my
follow my
system
system. Right.
that I trust. Once you do that, you can go back and forth in your fears and greed and fear, and then come back to that, and always let that be the sort of the your anchor. So
Well,
yeah,
listen,
yeah, that's
I think this is a great topic, and as you said, you and I said we could talk for months on it because it's so important. But I'm going
mhm,
to keep bringing it up because I know it helps me even at
mhm,
this stage that I'm in to talk about it
mhm,
and always
mhm,
re-examining. Okay, what's my thinking? Am I going into a trade with this concern about having to be right and having to make money? Because
mhm.
that's a bad start. Like it's one foot on the ice. You don't want to do that.
Yeah.
So anyway, we'll keep bringing these things up. Make
Mhm,
comments, as Barry said. Tell us about things you do or issues you've had, and we can try and address them in these sort of last trader chat segments of the weekly
mhm.
video. But anyway, look, great job today, Barry. I do think this was a transition week, this mean reversion, as we called it. The things are going to start moving again soon, whether it's next week or the following week. We're going to see some action and we're going to see some decisions in these markets, and it's going to create a lot of opportunity. So rest up, everybody, and we'll talk to you next week. Take care.
Thanks, Ben. Good job. And we mentioned the midweek podcast. I think we'll start it the week after next, because next week, midweek, is really the beginning of the week. So midweek would be the day before we do the Friday.
Right, right.
So we'll bring it up the week after. And this week we couldn't do it because of the fires. So that'll come online this month,
Shortly.
obviously, shortly,
Yeah.
very shortly,
Yeah.
and it'll be
Yeah.
fun to do. And all right, everybody rest up, and we'll see you guys next week.
We'll
Thanks,
see you
Ben.
next week. Take
Take
care.
care. Bye bye.
Bye-bye.